Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts. It's also September, which historically not the best month for much of anything, honestly. Looking at BTC since the cycle low, we are about where we should be, arguably. A lot of people losing the faith, a lot of people questioning the existence of their attention and time in this space, probably because they're mainly in altcoins and those have been obliterated, which I'm totally okay with. But as far as BTC is concerned, until we are far below cycle expectations, I don't think there's any concern. Each cycle is going to be a little bit different. We've never had a pre-halving all-time high. We haven't had ETFs before. We don't have passive money in the ETFs yet. We don't have wirehouses. We still have a supply overhang that may or may not be part of what's going on here, right? There's a lot of stuff, including this little thing called the US election happening in November. We've got rate uncertainty. So there's still a lot of question marks across the board. The big R word, recession. Are we going to have a recession? Is it possible to have a recession? The bulls and the bears are kind of just talking past each other because the bulls are like, you know what? I don't care what happens. They're going to print money. And the bears are like, well, wait a minute. But first, I want to capture this downside. And that's fine. The bulls see more upside than downside generally. So it just depends on your time horizon. ETFs have not helped us, but I'm okay with it. Look, we're still at 55. I mean, we were at 62 the week before that. A couple weeks before that, we were at 70. If we can squeeze out what we're squeezing out without completely collapsing, that in and of itself is a little bit of a miracle. I think this is the biggest outflow weekly, maybe on record here. It was negative 706 by my calculation. The only bigger net outflow was early on in the ETFs. We don't seem to have a lot of volume in general. So this is going to be a part of the conversation on the downside, obviously. Now, not all of that is net closing. Some of that is remember the carry trade, the basis trade, whatever. But still, that's a big number net on the downside. A lot of that was Fidelity this week, last week. For ETH, there's really nothing going on. Cumulative, this is really the number to watch. When will this return to a positive value? That's when I'll care about it. When it does, if it does, it'll happen quickly. This isn't like something that's insurmountable. It's just, it is not net positive since launch. That's a pretty bad look. We have issuers closing futures products from ETH, and we just haven't seen a lot of uptake on that front. As far as Google Trends, is anybody here? Bitcoin, Google Trends, past 5 years, worldwide, very little on the Google Trends, which I like. If you're a DCAer, if you're a market sniper, just waiting for your level, this is what you want. You do not want to be up here when Google Trends is maxed out at any point, okay? That's not when you want to be buying. So yes, if you bought in March 2024, you've been eating some pain. But there are some of us who have been here for many cycles and many years, and we're doing just fine. What we will probably see, hopefully, is just continuous flat nothingness on Google Trends, because again, that adds on the accumulation type of activity from the non-tourists. For ETH, more of the same, just not a lot of excitement. On Google Trends, Solana, you have to be careful with this one because if you're just using the search term, there is a IRL place that'll pop up in this, but even still, this has come way down from the highs and maybe have a little to go yet. Still, you can see the baseline down here, somewhere around 1520. We're still at 29 here on Google Trends. We can also look at the App Store. This was a favorite thing to tweet when the highest crypto app was ranked higher than it is, even in the finance category. Buy crypto, Google Trends also very low, and we can look at how this aligns with price. We don't want an index for Google Trends maxed out. That means everybody's already here and it becomes a crowded trade. We also don't want the RSI trending down, Google Trends trending down, right? None of this is necessarily conducive towards bullishness, but it's about what you'd expect based on the price action. That isn't exactly a surprise. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Poking around on a few alt charts. I mentioned last week relative to the AI coins. FET, I think, was another one, but there's a lot of this type of stuff on the alt side. No bottom confirmations yet, but it's something to watch for throughout the month. Can we get a bottomy type of fractal, aka inverted head and shoulders? And can we get a breakout? Can we make higher highs? All that is yet to be seen. But if you are a jaguar stalking your prey, you're waiting. You're waiting for this to get back to 150 or whatever other fractal you care about. But in general, it's going to look a lot like this. If we go down to FET, very similar as well. So none of these are perfect. None of these are necessarily stereotypical, but sure, why not? Why can't we get this throughout September? And then there's your neckline, and there you go. You know, there's your breakout to 250 plus on FET or whatever. It doesn't matter what it is, right? It just needs positive vibes. We're in a bit of a Vibecession on the crypto side of things. So Bitcoin doesn't like seeing the S&P going to zero. It doesn't like seeing the Qs going to zero. It doesn't like seeing bond volatility. It doesn't like seeing Forex volatility. It doesn't mean you're always just short volatility. It just means we need a habitable zone for bullishness that we have not really seen, at least in September. Now, this is what the bulls want. Obviously, I'm in this camp, okay? To me, there's more juice in the squeeze if we break out than we break down. That's not to say, obviously, if you nail the trade on the breakdown, it's a better multiple, obviously, right? This is still on the table. It's existing in the corner of the room until we start making highs. But it's still here, sure. And that aligns with the power law corridor. Post-halving, we typically break above this midpoint and then attempt to push to the other edge, to the highest point, which would be around, in this case, 300,000. Unlike 2019, where we sort of broke out, came back down, went down to the lower band thanks to COVID. Like, that's still possible. We never got the breakout though, but I'm certainly more focused on the upside than the downside. DCAers love it, but as a trade setup, I really want to make sure I am on board the train if we go higher. Now, this is what the bears want. The bears want sub 40, sub ETF open, and basically the 200-week moving average, which is around 40. There is a VPVR level at around 42, which is, again, the ETF open-ish. It's GBTC unloading on us at that point in time. And so that's on the table. Sure, in the near term, within the month, possibly, right? It's just not something I'm actively seeking personally. But yeah, you could trade that. You could say, you know what? I'm short with a stop loss at any higher high. Been that simple because we continue to make lower highs and lower lows. We're also sitting in this bearish pitchfork. BTC also has a pretty disgusting looking, I don't even know if it's fair to call this an unconfirmed inverted head and shoulders, but we're going to call it that. We got to call it something. Why not? If we don't make a lower low, I guarantee you if we get back to the 60s, people are going to be throwing this fractal out there. So sure, why not? But ultimately, the market is not really going to be sure that the bearishness is over until we're above 62, 63, which makes sense. That's also a higher high at this point in time. But as far as the cloud does not look bullish here. This is fully bearish TK cross, bearish cloud. This may pop back up to 60 this week. The cloud doesn't care. This looks much different than it did October to March 2024. So this is what we want, and this is what we have. Very different. So that's bearish. 2-day also bearish. At this point, the 2-day cloud might reset. The only reason I'm going up the time frame is that clearly the daily is giving you a bunch of fake signals here, noise. The 2-day's been a little bit more clear. It's had a bearish TK cross since May. And as a trade, to me, it's always easier to see this TK crisscross like we did in July, September 2023, or just everything just fully resets. At this point, the cloud will probably reset bearish, and it's just something else to watch on the periphery. This is going to take a lot of time into October if we start to have strength here. Weekly cloud looks fine. I don't really have any complaints here. If we start to break down, we're talking about 45, which again goes back to the bearish target. But as a setup, do I have confidence in any of this? No, I don't have confidence in anything. So I just don't do anything, right? Like, I haven't taken a real deal crypto trade since May. This is the 20 week, the 200 week, below the 20 week. That's not bullish. It's binary, right? Bullish, bearish, bullish, bearish. Below the 50, below the 200 with the death cross, we could bounce back to 60 again, right? Like, all that is totally on board with fine possibles in the outcome of the universe, in the multiverse, right? This isn't saying we have to go to zero. It's just saying we tend to be more bullish when we have a bullish cross. It's that simple. When we're above the 50 instead of below, when we're above the 200 instead of below. So confidence in any longs here is just zero because everything is leaning bearish. Even the 1050 cross is bearish. And this will be the most sensitive. This will be the fastest thing to cross bullish if and when it does. And you can just wait. You can just wait. There's no reason to rush any of this. It's September, and I went over the uncertainty in the open. We can also look at Bitcoin relative to the S&P. Similar type of inverted head and shoulders, mega fractal, cup and handle, 5200 crisscross potentially. Sorry, 1050 crisscross potentially coming up here. BTC relative to the Qs, same thing. BTC relative to gold, same thing. I don't see this as bearish personally. I know some people might look at this and say, well, we didn't make a higher high here. We didn't make an inflation high, whatever, right? But to me, this looks fine. I'm not really concerned. Usually gold moves first and then Bitcoin moves about 3 months later. And that would bring us into Q4, assuming gold slows down. But again, I don't think there's any concern about anything on the bearish side. We did break out against TLT pretty considerably, not adjusting for the dividend here on TLT. But this would be an interesting level, 491, whatever it is, right, on this pair to watch and see if it becomes an actionable signal, if we bounce there, if we retrace to that level or not. It seemed to be a pretty big deal in 2021. And then Bitcoin against M2, same thing. Sort of made a higher high, didn't hold it. We've got this 1050 crisscross maybe coming up, maybe not coming up. And against all these relative value charts, we've given a bunch back, but I don't really see this as a bearish setup on the chart just yet, based on where we sit here. And looking at a few things across the board, Legacy, Coin, MSTR, CleanSpark, Solana, all of them look about the same to me in various degrees of bearishness. Coin, the most bearish. CleanSpark, right there with Coin. MSTR looks bear on the cloud. It's certainly bear on trend, and you have to be careful for this head and shoulders, King's Castle thing, whatever we want to call it. And the same thing with Solana, right? Solana and MSTR both are still holding pretty strong relative to Coin and CleanSpark, right? So the most beta has broken down already. And I certainly just wouldn't assume that MSTR and Solana will hold their low here. Coin and CleanSpark have reached their bearish target, but I wouldn't assume they would just bounce here, right? This whole thing can look like a head and shoulders, much like it does on ton. That chart looks horrible. So I wouldn't necessarily be looking to short the left side of these charts, whereas the right side of these charts, to me, have not broken down yet. And as a setup, just something to watch, right? To negate the bearishness, back above the cloud, make a higher high, and we're good to go. For Solana, that's 160. For MSTR, that's about the same, 160. But if I had to take a trade today, the assumption would be bearish continuation or bearish reversal based on how everything else is setting up and positioned. There just isn't any bullishness to speak of on the crypto side of things. And then total 2 against BTC. This is inverted dominance basically. And this is the ETH BTC chart as well. Very bearish, has been bearish for quite some time. And that's that, right? There's nothing else to analyze or say. It doesn't have a triple bottom. It doesn't have a range. It's not consolidating. It's not doing anything down here. So it certainly needs more time, but it also needs time in a range, much like it did 2019 through 2021. It doesn't need to be 3 years, but it needs to be something. And there just isn't anything suggestive of bullishness here. Despite Bitcoin dominance continuing to break up, total 2 over BTC to break down, global liquidity has broken out cleanly week over week here. Stablecoin market cap also continues to rise in these jaws between liquidity, US liquidity, and white crypto liquidity or crypto market caps in orange and blue there. That continues. So my read, again, I'm a bullish divergence enjoyer here based on this. That isn't to say alts can't continue to get crushed, but the liquidity is on our side. Dollar weakness is on our side. Nothing goes straight down or straight up, and the dollar had a very quick decline. So if we're going to see additional downside below 100, that's a massive psychological level. That will probably take some time, some bearishness. Maybe we bear flag here. Maybe we attempt to break up and that fails, whatever, right? Rates are probably coming down on the 18th, almost certainly 25 basis points. That's probably already priced in. So depending on what Powell has to say at the meeting, any forward guidance whatsoever may push this below 100. We have CPI this week. That's going to come in under last month's CPI. Inflation on a year-over-year basis continues to decline. It's the aggregate inflation that is a problem. But that does give the Fed some room to start to cut, in my opinion, and that's what they're going to be doing. A lot of discussion about the 10-2 on inversion this week and how that's a recession, bro. I told you this was going to happen. This is the longest inversion. That means it's going to be worse than 1929. Be careful out there. I joke, but this is what people are saying. Certainly a time to be cognizant that we are closer to a recession than we have been in the past 2 years. Certainly, but I wouldn't say this is a guaranteed slam dunk recession. Unemployment ticked down briefly on last month's print, and we'll see what the Fed has to say on the 18th. The 10-3, which is the preferred inversion and uninversion of the creator, Cam Harvey, it still remains deeply, deeply negative. Eventually, this is going to have to go positive because it just doesn't make sense. In my eyes, this is more important to worry about than the 10-2. The 10-2 is the first shot across the bow. It says be careful. And once the 10-3 uninverts, and we'll see what this looks like on the 18th and beyond, then we need to be careful, right? What does unemployment look like? What does everything else look like? On the bond side, on the filthy fiat bond side of things, these charts continue to look phenomenal to me. This is not what alts look like at all. TLT, IEF, SHI, and AG all look very, very good. Very, very good. Multi-year downtrends ending after a multi-year consolidation period. Inverted head and shoulders on all of them. Maybe an ascending triangle here on SHI, but these charts look excellent, continue to look excellent. Trend looks very bullish for risk off. So if you're looking for somewhere to hide, that's where I'll be. You can join me if you like or not, but that's one thing to do right now. Get cozy in risk off mode and wait until Bitcoin is either sub 40 or above 62. And then a few others on the legacy side, Roblox, however you say that, looks phenomenal to me for the same reason as TLT. PayPal, same thing. Multi-year consolidation, downtrend coming to an end, potentially. And then you've got IGV and Hack, which are software and cybersecurity ETFs, which both are making a pretty strong case for a cup and handle. So it's kind of slim pickings across the board as far as setups are concerned. And on the BTC side of things, it looks pretty cloudy with a chance of chop. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.